So this is size screen. Let me turn this off here. And he's sharing, was it NASDAQ and ES? So, yeah, go ahead, Sai. I mean, if you got
it. Yeah, thanks. So yes, I completely agree with the whole background and context that Steve just said. The goal was basically to issue signals. The goal was never to auto trade, because as I've been saying for several years now, is a signal has to be vetted. There's a lot of market context that goes into it. There's timing information. There is news that goes into it. So all of that has to be considered before taking a signal and entering into a trade with real money. But people were like, oh, but the thing is there, we're not able to enter at the right spot, so give us ability to auto trade. And writing code is the easiest part, right? So we just spent a couple of weeks and essentially came up with the whole auto trade execution aspect of it. And now people are complaining, well, it's not profitable, it doesn't make money. No, of course it doesn't, right? Because if you leave it on and ask it to trade every single signal issued, it's not going to be profitable, right? So this session it's going to be a very short one. We're not going to go on for hours as such, but the goal is to show what makes a good signal, right? As simple as that. It's really just to understand when to take a signal and when not to take a signal, right? So looking at the charts right now, I don't know if I can write on the screen. Maybe I cannot write on the screen, but let me
there's annotations up on top. If you turn them on, you can do that. They're on the zoom control.
Yeah,
under view options and whatnot, you could annotate things.
Okay, so let me try and enable that. So annotations, yes, I do see annotate.
And then you can hit clear the same way. There's clear on there too. If you want to erase everything, you just clear it.
I see. How do I? Oh, okay, that's cool. I guess I can draw.
Yeah, I see it right there.
That is cool.
Your circle. Yep.
Awesome, awesome. Okay.
And then you can clear it by doing the same thing.
I see. Okay, I think that is fine. This is good for now. Now, as you can see, there is a short signal that got issued somewhere here. Now, is it a good signal? Right? That's the bigger question. Now, let's see what is actually happening here. What is the context right at this point in time? This is 1835 when we actually got a shot on NASDAQ. This is 34 range. So let's go back and take a look at other charts. What is ES doing? As you can see, ES is chopping in this fine range. There is resistance right there. There is support right here. That gap is about 9 points or so, maybe about 10-point gap. And most of the bars are trading above the mid band, which is the EMA 55. Right, and which is what we generally use for support resistance as well. And looking at ES, the likelihood of short here is highly unlikely. Okay, and let's go and look at the NASDAQ 21 range chart at around 35. As you can see, the EMA 55 is literally going up, right? So that's why this signal here is a bad one. You would literally just ignore it. Now, if you enable auto trading, it will take a shot and eventually get stopped out. Right? Now, that is just being dumb to enable that, right? So you should look at what happens on the other time frame charts. For the same instrument, NASDAQ, on a 21 range chart, it is clearly saying at 1835, 36, whatever the time frame is, which is probably coming here, there is no short here. This is not a short. Right? But based on mathematical formulas, this chart does look like a short. Sure, it might just go down from here and trade the support. Yes. But what is this chart saying? It's not a short. So then don't take it. Look at ES supporting similar other instrument. What is it doing at 35? It's right there. And this is not a short either. Right? So that's why this is a bad signal. Okay. So let me erase this. Let me try how to erase it. Click it. Uh-oh.
Go to annotate again, and I think there's clear or something in there. Clear all drawings or your drawings.
Got it.
There you go.
Right? So now let's take this signal here. I'm going to draw this again. Now let's take this specific signal. Yeah, it's not that easy to do this, but okay,
Yeah.
Let's take this signal. Is that good? So the chart by itself, there is support here. There is the EMA 55 there. So 2 zones, which is what you need to have at least, right? Then let's see, what time frame are we talking? 16, right? What is ES doing at around 16? Not that great. Same situation in a narrow band. Okay. So what is the other time frame chart doing? The other time frame chart at 16 is right there, undeterministic. You don't know. The signal is not issued yet because the signal was issued later. Okay. This showed up at 16. This signal showed up at 35 or so. So most probably you would ignore this. Why? Because the chances of success are not that great. Right? So you would just ignore that. As simple as that. Okay, let's go back and look at a different one. I have to again figure out where the annotate is. Clear. Okay, got it. All right, so let's go back on NASDAQ. Some other trading signal. Okay, let's take a look at this guy right here. Okay, this is around 1330. So 1330, somewhere here in this area right there. Okay. And this chart, 34, 1330, somewhere here, right here. Okay. I'm going to enable the global, but no time scroll. I think that will be good. All right, let's do that. Okay, so 1330 is what we're looking for. So somewhere right there in this area. Okay. All right, so let's go back and see what happens. All right, so we got a signal right there for a short. And number 1, there is the EMA 55 as zone number 1. Boy, hang on, guys. My apologies. And then so that's number 1, which is the EMA 55, right? And then the second zone, can't write. Okay. Am I still sharing anything?
Yeah, it just must have just gotten hiccuped or something, but yeah, you're on.
Okay. And then the second zone is okay. The second zone is a resistance zone right there. You see that? That's the second zone. Okay. So it's good to have 2 zones, right? So we want 2 zones. When did the signal show up? The signal showed up on that bar, but the zone showed up on this bar right after the close of this bar. So the resistance did exist by the time the signal showed up. So this is a high probability signal. So now let's see what exactly happened at around 1330 on the higher time frame chart, which is the 34 range chart for NASDAQ. So 1330 is somewhere right there, right? As you can see, the EMA 55 is moving down already steeply. You already have a red zone in place. So this, I would say, is a supporting chart to this short signal right there, right? Let's also go take a look as to what is happening on the ES8 range at around that time. 1330, which is probably somewhere here, right? Somewhere in that area. And as you can see, the EMA 55 is nicely moving down as well. So this is a good signal to take, right? Now, the program cannot differentiate between good signal and or bad signal unless it correlates the data from there, from this chart, and from that chart, right? Now, is it possible to correlate all those signals and from multiple charts and do it? Yes, it is possible to do it. Now, is it possible to run that kind of a correlation logic on every single one of your machines? Highly unlikely, because most of you are running these trading signals on weak computers and maybe on laptops. And it takes a lot of processing power and memory to generate that kind of a consensus by looking at multiple charts, which is why we did not provide you that capability. But is it technically possible? Yes, it is possible, right? So this constitutes a good signal. You should have taken that signal, and you saw what happened after that. Even if you take 5 points, it doesn't matter whether you take 5 points, 10 points, 20 points. That's not the point. The goal is to identify whether a signal that is being issued, is it a good signal? Should I go with it, or should I just ignore it, right? So that was a good one. Okay, let's just go scroll back and look at something else now.
You probably have to turn your annotation on.
Yeah, I don't know how to.
I think what happens is when it goes into annotation mode,
Okay.
it kind of like takes a picture of your screen, I guess. And yeah,
I think so. Yeah, I definitely agree. I think that's exactly what is happening here.
So, Sai, before you go on, I have a question.
Mm-hmm.
So, I guess to say my job is when I get an entry signal, I need to look at all 3 charts just to make sure it's a good signal. With the 2 or the, let's say I'm doing NASDAQ. So I got to look at the other NASDAQ and the ES, or is it just
Yes,
the 2 NASDAQs?
That's what I do. I always look at ES and one higher time frame of the current instrument. If you are doing Dow Jones, YM, I look at the existing chart of YM, which is where the signal is being issued. Then I look at one up of YM, and I always consult ES because
Okay.
ES is more stable. NQ is not that stable. Sometimes YM is more technical as well.
Gotcha.
Right? So I generally take a consensus model approach, and the consensus model approach happens with the current chart and one higher time frame chart of the same symbol, and then some other instrument which is technical. Generally, ES and YM are technical. RTY and NQ are non-technical. I mean, they're not that technical. YM and ES are extremely technical instruments. So that's why I consult generally with ES. And for ES, I consult with YM. That's what I generally do. Okay. Okay, so let's take this signal and see what shows up as a result of this one right there. This is around 12:30 p.m. Let me go enable annotation. Drop. Okay, so this is the signal we're talking about at around 12:30. We got a long signal on NQ. So let's see what is NQ doing at 12:30. As you can see right out of the bat, this is basically going sideways. And you see how these smaller, what do you call them, Steve? Steve, you were on? All right, these are some sorts of moving averages. I don't know, Steve has a specific name for them. But essentially what we're looking for is when you get a signal, you see how these things come into kind of like a valley kind of a thing, and then they cross over. This is the pattern we're looking at. We want to look at that kind of a pattern, and you want to get a signal right there. right? And I mean, obviously you don't see this portion, right? Because this portion doesn't exist. You want to see this dip. The dip has to happen. And here, as you can see, the dip is actually happening in the reverse direction on the higher time frame chart. You got a long signal here. So this looks fantastic. The dip is there. And you got a signal to go long on the 21 range chart at 12:30 p.m. But look at what is happening at 12:30 p.m. on the higher time frame chart of NQ at 34 range chart. You're talking about somewhere in this area right there. And see which way the dip is happening. This looks like, oh boy, this is not the right dip. If 12:30 was right there, like that, you see the dip happening to go long, and you got a candle up here. And if the EMA 55 is like that, yes, I would have taken the signal. Right? But what is happening is here, let me see if I can draw it on a black screen somewhere. Okay, let's pull this up here. So the smaller time frame is basically saying that, right? Just like that. And you got a signal right here to go long, which looks fantastic, by the way. But the higher time frame is basically saying this. And your candle is right there. This and that are not correlating. If the higher time frame had even a flat EMA 55, but a dip like this. Sorry, I can't draw. If like that and your candle is here, then yes, I would take this long, supporting this long here on the smaller time frame. But this is a bad, this is not supporting it. And see what happened. It probably went, it did go. I think you get a little bit, like, maybe 10 points or something like that, or 15 points. But the point is, it's not a good signal. This is not a great signal, right? I wouldn't say this is a bad signal, but in my mind, it is basically a bad signal, right? And also, as you can see, there is a support area right there. Number one support is obviously the EMA 55. Number two is this support zone. It goes from right here, but the support zone only got presented after the signal. So there were no two support zones there. So you would not take this trade. You just ignore it. Right? And also let's see what happens at 12:30 on ES. So let's see, 12:30 somewhere right there. Right? And again, see what these other averages are saying. They're going like that. Right? They're not going like this. This is what you look for. That is your EMA 55, and these are your other smaller averages, and the bar is somewhere in this vicinity. That's when you go long. That is what you're looking for. But in this case, we have EMA 55 is like that, and you have your charts doing that. This is not a long. Right? That's why you would ignore the signal. Now, if you leave it to the executor, it will take it because it cannot differentiate. It doesn't understand all of that. It is just going based off one chart, and based on one chart, this is absolutely a wonderful signal. And to be honest, if you guys had taken it, it would have probably worked as well. You might have made 5 points, 4 points, or at least worst case break even. But why risk your capital by investing your time and effort in these types of signals when you can easily skip them? Now, again, this could have been skipped if we made a consensus model from that chart, this chart, and that chart. If we made a consensus model, this would have been an avoided trade, but we don't do that today.
The other thing I noticed you have on your charts, I don't have them on my charts. I did, but I took them off. And that's the call them the outer limits. I think there's an indicator called
I do that, yeah.
Outer bands or something like that, or outer limits or something like that. Anyway, I forget what it is. But in any event, and all it is you can see it's just like an electrocardiogram. Anybody who's in the medical field, there's just waves back and forth, back and forth. That's all it does.
Yeah,
And
yeah.
you just got to catch it in the tide, it's like the ocean's tide, and you got to, for surfers, you just got to catch the tide and you got to get on it and then ride it in.
Yeah, it's basically reversion to the mean, right? Assume that your EMA 55 is the mean average, and then the candlesticks are going to reverse back to the mean. And then once they reverse back to the mean, if the direction is right, if the angle inclination of the EMA 55 is right, and if the other charts are supporting the trade and they're presenting a similar model, then you go for the trade. Otherwise, you ignore the trade. That's pretty much it. It's not rocket science. But anyway, let me just go back into some other signal. I haven't even looked at the day today, but okay. So let's take a look at these signals here. Okay, this is cool. Let's see. So this is at 10:02 and 10:06. Okay, let's look at that. Okay, somewhere in this area, right there. Okay, cool. Okay, so let's go back to the drawing tool. Okay, so the first signal we got was right there at 10:02, and the second signal we got was right here at 10:06. Okay. Let's go. So number one, there is here, if you see, there is a zone right there. The EMA 55 is, of course, one of the zones. There is a second zone here, but, the EMA 55 is above the zone. Yeah, I guess this is an okay signal. It's still a resistance. It's not that bad. So let's go take a look at the same 10:02 trade on the 34 range chart, which is a higher time frame chart. So that's what is actually happening right there. 10:04. As you can see, I think this is probably what 10:04 is right there. That's what we're looking at, 10:04. And here you can see that what are the things doing? The EMA 55 is kind of flat, so which is fine, I guess. But what are the other smaller moving averages doing? What is the pattern? The pattern is that. And in that pattern, you don't look for a short. If anything, you look for a long, right? For a short, you basically look for something like that and the smaller averages to do that. And then you get a signal down. That is what you look for a short. But what you actually got here was totally different. You should not be looking for a short in that point in time because of these, right? So that's why ideally I would have ignored it. But let's also take a look at 10:02 on ES and see exactly what happened. 10:02 and ES is somewhere in this area, which again is not very confidence inspiring because you can see that the averages are doing that instead of doing that, right? So the patterns don't agree. Neither the NQ higher time frame chart nor the ES8 range chart agrees with this initial signal. So just avoid. I would just avoid the initial signal. Now let's go take a look at this signal at 10:06, right? In that time frame here. So let me clear the drawings and go back to the mouse to get an exact time. Okay, 10:06:01.
Want to stretch it out a little bit? Is that bigger for people or?
Yeah. Okay, so that's what we're looking at. So now what actually happened? So let's see, 10:06:01 and here 10:06:01. Okay, so we're looking right there on that chart here. Okay, so let's go back, drawing to here. What happened? So we got the first short and we decided to ignore it because neither ES nor the NQ higher time frame chart agreed with the short. So we ignored the signal. Okay, so then what happened? As expected, price continued to go back up and you see that there is a resistance right there. And you see that there are two resistances from two different indicators. You see the red line, that is from one company, while you see the other block line here, that is from a different company. So two different companies, basically meaning two different indicators, are saying there is resistance right there. And what happened to price? Price literally went and traded that resistance, right? Do you see that? Price literally went, traded that resistance. There are two resistance zones clearly showing up on the chart. And then finally, we get a signal right there to go short. Okay. And what are the smaller triggers looking like? The smaller triggers are looking like that. Right? And then you got a short signal. I would say that is pretty good. Why? Number one, you got confirmation from two different zones here, right? And then you got confirmation that the price was rejected from the resistance point. Number three, your smaller moving averages were pointing in the right direction and you got the right direction to trade. Okay, so now let's go back and look at the higher time frame chart at the same time. We were looking at exactly that, right? This one here. Look at that. That is 10:06. Not that one, actually. This one is 10:06, right? This one is 10:06 right there. Okay, so what, again, let's look at it. How does the things look? Right? And that's what it looks. And that's your down signal. Okay, so I would say this chart does agree, supporting that second signal. Okay, now let's go take a look at what 10:06 looks like. I think we said this was the signal bar here. And yeah, this is not great, to be honest. I would have loved if this whole thing shifted there, right? This would have been an awesome signal. But in this case, it's kind of a mixed situation right here. It's kind of a mixed situation because we got a signal on the 21 range chart. The 34 range chart is actually supporting your short, but ES8R is kind of in a mixed zone right now. It's a question mark situation. At that point, you decide what you want to do. It might work, it might not work. Or if you might want to decide to, if you might decide to wait to see that, oh, I want more confirmation from ES. Okay, well, let's wait for more confirmation from ES. The original signal was issued on that bar, 10:06:01, or no, actually, no, so not on that one. I think the original signal was on this one, which is 10:06:01, and you waited for confirmation. And you know what? Right there at around 10:09 or 10:10 or so, you anyways got a short signal on ES as well. While all of this was just acting upon, and NQ was already in a short, and you can clearly now see that the EMA is trying to move down, you know, by around 10, whatever, 18 or so, 10:18, you're already right there. You're right here. And the resistance is holding, the EMA 55 is scrolling down, the bars are all down. And what is actually happening here at around 10:18? Look at that. This is what is happening. So even if you missed this trade, because you know you only got one confirmation from the higher time frame chart, you did not get this confirmation from ES8R. Let's say you decided to ignore that signal. You know what happened? Right after that, 10 minutes later, you got a second signal. And this is absolutely an awesome signal, right? And the NQ higher time frame is supporting it, and the NQ21 range is supporting it as well. So you would take the trade, right? So this is a good signal, right? This is an okay signal. That is a bad signal. The first one is a bad signal. The second one is an okay signal. This third signal on ES is a good signal. That is how you should filter the signals, by looking at least two other charts, one from a different instrument, one from a higher time frame instrument. You do that and you will not make mistakes.
So the ES signal was more of a confirmation that even though it's a signal on its own by itself on that chart, it's really you're using it as a confirmation to the NQ.
That is correct. That is correct. Because we got a signal on NQ, and let's say I was hesitant to take that because I did not have 2 confirmations. And
Right.
let's say my rule book says I need 2 confirmations from 2 other charts. Okay, well, in that case, I did not take the signal. But immediately I got a confirmation from ES. That is what was pending before. And now I got the signal.
Yeah. Yeah, I use the higher time frames. I don't use ES though, to be honest with you, as a backup or anything. I'll sometimes look at gold and see what it's doing, but I don't
Yeah.
like ES.
Yeah, I mean, it's slow. It's slow, right? And if you want to go further back, okay, so let's take a look at these 2 signals right here. What time is this? This is 8:09. Let's go back to 8:09. And here, 8:09. Right there. Right there. I mean, I don't even have to draw here, I guess. At 8:09 on the NQ21 range chart, the EMA looks fine. These smaller moving averages look just fine. They're basically going down, and you got an up arrow. Okay, fine. This is fine. 8:09, right? Now let's go look at 8:09 on the higher time frame chart of NQ. What is it doing? This does not look good, right? First of all, there is a resistance zone right there opposing your trade. Secondly, look at what these smaller moving averages are basically saying. Look at the direction. If that signal came in at here at 6:56, it would have been a different story. Oh, by the way, you actually got that signal, didn't you? Do you see that? At 6:54:57, right? That's exactly where you got the signal. Look at that now as to how does it look like on the higher time frame chart. It looks right there. It's fantastic. I would take the signal immediately in a heartbeat. Why? Because here we're trading right near the EMA 55, and these triggers, these smaller moving averages look awesome. And that's exactly what is happening on the higher time frame. Again, we're trading right near the EMA 55 as a support area, and then these smaller moving averages look awesome. And then let's go look at 656 on ES and see what exactly has happened right there. Somewhere right here. Yeah, unfortunately, ES is not supporting the trade. Yeah, so you can choose to ignore the trade again. But I don't know though. 656, you see the support area forming here. Maybe the 656 trade might not have it, but a bar later, you would have the support area drawn. So you could potentially avoid the trade immediately on the signal, but maybe jump into it right after you get a confirmation of the support area on ES right there, because you would get that area show up right after the close of this bar. Right? So maybe this is a delayed execution situation. Why? Because originally ES did not support the trade. Right? So that is how I would do it. And then this trade obviously is a bad one, because ES is also denying this trade, right? At 8:09, if you look at the ES chart at the bottom, you clearly see that that's not a great pattern for the smaller moving averages. So that's not supporting a long. In fact, we actually got a short right there, which means ES and NQ are conflicting with each other. And look at the higher time frame chart on NQ34 range on the right side. You will also see that there is a resistance right above, and the smaller moving averages are not in the right look to basically support a long. So absolutely avoid that trade, the second signal. So the first signal is definitely, again, an okay signal. Why? Because NQ21 range issued the signal, NQ34 range supported the signal, but ES8 range did not support the signal till 1 bar late. So that's why I say it's an okay signal to take. But the next one here is actually a bad signal to take. Okay, and now let's see, there's a short here at 6:01. I don't know what 6:01 looks like here. Yeah, 6:01, if you look at ES, you can see how far it is from the EMA 55. I would literally just avoid those kind of trades. Why? Because, like I just mentioned, reversion to the mean. price will always come back to the mean. These smaller moving averages will always tend to come back to the mean. So if you're taking a trade this far from the EMA 55, chances are that it will come back to the mean. That is exactly what happened here. So that's why I would avoid those kind of trades where the price is way too far away from the EMA 55. So clearly the ES8 range is not supporting that short signal at 5:59 or 6 a.m. or something like that. And let's also look at the NQ34 range. That is also an okay kind of a trade, right? It's not that great looking, but yes, your triggers, your smaller moving averages are still forming. They're in the right pattern. So I guess it's an okay trade from a NQ higher time frame chart, but definitely a bad trade from ES8 range chart. That's why I would avoid that signal, and clearly did not go much further. I mean, I think it definitely gave you a break-even situation, but still, I would just avoid the trade. There's no point in executing the trade. And that's it. Those are the trades for today, and we can continue going down. I mean, if this is what you guys want to do, I'll just consider this last trade.
You're looking at NQ. So if somebody's trading, crude, do you still compare it with? I mean, obviously, I always look at the higher time frames. That's what I do too. But I'm talking about with ES. Do you also?
No, I don't do crude and ES. For crude, I only look at the higher time frame.
Yeah, okay.
I look at two other higher time frame charts. But with indices, I look at one higher time frame and one other, either ES or YM.
Okay. Yeah, because I always look at the higher time frames, and sometimes I'll go 2 levels up, especially with NASDAQ.
Yeah.
I'll do 34 and 55.
Yeah, absolutely. I mean, everybody has their own sweet spot and their whatever they're comfortable with. For some people, fast movements are difficult to follow, and believe me, you will get better at it, right? The more you practice these, the much better you will actually become eventually. And then you will start spotting these trades like super fast, and you're going to say, well, that works. That is probably not going to work. This is a good signal. That is a bad signal. That is an okay signal. You will be able to tell that apart just within, I would say, about a week's worth of effort. But you have to look at your charts. You have to sit there. You have to look at them. And if you don't look at them, and if you believe in a program running the trades for you and investing for you, I mean, you're going to get mediocre results. Why? Because the program cannot differentiate between these multiple charts. The program is programmed to work off of one chart. It's not programmed to build a consensus model between 3 different charts. That's what a human mind is made up for. Right? So please don't use that. Please don't use the signal generator for trading automated 100% automation without human involvement. Please do not do that, because these signal generators were not designed for that. They were designed to issue signals so that once a signal shows up, the goal was for a human to step in and say, is this a good signal or is this a bad signal? Can I take the trade, or do I need to avoid the trade? That was the goal, so that you are not staring at your screens 24 by or whatever, if you're trading 3 hours a day, so you're not staring, your eyes are not glued to your screen 3 hours a day. But you can take some breaks in between. And then the signal generators also have the ability to alert you through sounds and all that. The moment a sound triggers, then you immediately come back and take a look and say, well, should I take the trade or not? That was the goal that was the intent of developing these signal generators. And that's how I use it every single day.
Or the other way, instead of waiting to hear the sound, if you're looking at it, if you are monitoring it and you're looking at it, and you're like, I like that, I like it, I like it. And then all of a sudden you hear the signal, then you've already evaluated it, and now you've got that signal confirmation, and then you're comfortable with it.
Exactly. So you're already there. So you're like, oh, this is awesome. It's setting up. I really like this trade setup. Look at that ES, it's awesome. Look at NQ. It's super awesome.
Where's
Look at
my
that higher
trade?
time frame. Exactly. Where is my signal? Where is my signal? That's the situation you will get to in about a week's worth of effort. All it takes is just the goddamn week. And that's all you got to do. And then sometimes, trust me, you are going to get into trades without the signals showing up. And then eventually the signals will start to show up. And you are like, oh my good Lord, look at that. I was faster. I was better.
I'm already in it. Yeah.
Exactly. You will get into that state. But it comes with practice. You need to put in the time. You need to put in your, you need to understand these patterns. You need
Well,
to
it's screen time. You got to look at the screen time. And if you look at these charts, I mean, they're just back, forth, like you talk about going to the mean. It's just like, when I was a paramedic back in the day, went to school, and you have these rhythms. If anybody's into the, the cardiogram, and everybody knows the systole, or it's just a flat line, but there's different rhythms, and you get a call or whatever, and you're looking at a patient, and you look at this electrical rhythm, and it will tell you something, but it's lots of screen time, because there's like about 12. We learned about 12 patterns. There's more for higher doctors and all that, but for us it was like about 12 patterns that we had to know, and we were constantly quizzed on them, and you had to recognize them and say, okay, that's this. And it's the same thing with this. You get familiar with it. I mean, it repeats itself. Like you said, it goes back to the mean, and you can see it. And then when you see them starting to become in tide with each other and rhythm with each other, then it's just a matter of getting right on it. It's just screen time.
Yeah, and then once you start looking at them, you will start to understand some key patterns that show up over and over again. And here is this classic example. What happens is sometimes you get a signal right there, and then the price does this. It goes down, it comes back, and then it's false. The signal sometimes is issued right there, and you are like, look at that. It took me out right there to a stop.
Yeah. Oh, yeah.
And that is exactly what would have happened here if you had taken this. Look at that. But it never violated your area. What is your area? Your area is number 1, EMA 55. Number 2, resistance. Do you see 2 areas here? This is the second area. That is your first area, the EMA 55, the green line, and then your resistance. You had 2 areas. Your stop is supposed to go right there. It never violated your stop. But how do you do that with programming?
Well,
I mean, you can't do that.
Gonna jump down there to protect yourself, but you have to move.
Exactly. Exactly. So this is a very common paradigm. This keeps happening, and you are like, oh, I know this pattern. You know what? I got in right there. It is expected that the market will come back up, and it does come back up. It trades this first zone, and then it falls back down.
That's why you hear a lot of people that don't like to break even, because when it goes to break even, it's just, I mean, everybody's getting in there, and all it does is it comes down like there. I can't tell you how many times I've seen that. It goes, you get in, it goes down, it comes back to the same area again, and then it fails and it goes. And a lot of people will get popped out right there because they go to break, they're a little bit in the money, and then they go to break even, so it's a free trade, and boom, they get popped out, and then it takes off without them. Seen it over and over and over again.
Right. And so let's actually erase all of this. Now, let me actually demonstrate another idea. Let's consider this signal, for example, right? You got the signal right here, and it's like for, oh boy, I can't see what this is, but let me actually go back here. What time is it? We got the signal at 4:27:58. Okay. So look at what ES is doing, right? Bottom chart, left side, ES8 range, 427. We're a little late. The small moving averages are not positioned in an excellent situation, but the 21 range NQ, the small averages are positioned in a fantastic situation. Now let's go take a look at the NQ34 range chart, and you're like, you know what? It's not that great, but I would want to wait and see what exactly happens, right? So you can literally wait and see. I mean, you're nothing to lose. Your entry would have ideally been 696, right? So let's say you decide to wait and see, wait and watch. What happens then? The market comes back up a little bit, at whatever this 427 time frame, 427. Look at that. And then market goes up a little bit, and then it trades the same level again. And this time you get a confirmation on the NQ34 range chart where like we went down, we came back up, the area traded a second time again. And it's the same area, by the way. Look at the EMA 55 on both the charts, 21 range chart and the 34 range chart. It's the exact same number, right? And that number is holding up on both the charts as resistance, right? So that is your opportunity to get back in. So even if you ignored this previous trade, why? Because you know what? ES is not really looking that great. Now see what happens. You got a confirmation that this area is absolutely going to hold. And it only went to 11,700 or something like that. And then it fell straight down. And at the same time, while all of that confirmations are happening in your mind, you see this. Right? That is a beautiful chart trading pattern. Everybody knows that.
Yeah. Yeah.
So again, as I said, the signals are signals. They're mathematical calculations that are scoped to a single chart. Okay, the signal generators were created to help traders understand potential opportunities. They were not created as an automated trading interface. The automated trading interface was only included because everybody was asking for it. We're like, well, we're not able to get in at the right moment, at the right level. So that's why it was introduced. But as I've been saying, from a very long time, you should never, ever use the automated trading interface. You should do it manually. Just take 3 or 4 good signals per day. Sit for 2 hours, 3 hours, spend your time, do your work, do your due diligence, understand the patterns, understand what the signal generators are generating, understand what consensus model you need to build, and what consensus model are you comfortable as a human for your account size, for your methodology, for your thought processes. How much risk can you take? What time frame charts you can work on? Those are things that you need to figure out. We cannot tell you that you should trade 21 range and 34 range. Maybe you don't have an appetite for that big of a risk, or maybe that is too small of an appetite for you. It all depends on your account size. It all depends on what your max drawdowns you can allow. It all depends on what profit targets you want to achieve per day, per week, per month. It all depends on that. And you don't have to take 20, 30, 40 trades. No, that's not the goal. The goal is to take 3 to 4 excellent signals using a consensus model that you develop in your mind that you're comfortable with. And you will be successful.
Let me ask you a question. This is actually it's a 2-part question. So let's say I wanted to focus. I'm not a big fan of NQ, but let's say I wanted to focus on ES. Would I trade an 8 range and a higher and look at 1 NQ? And the second part of the question is, if the answer is yes, what would that higher ES chart be? I think 13 is too close. Would it be the 8 and the 21 maybe?
You can do
the Fibonacci numbers are the ones that we like the most. The 5, 8, 13, 21, 34, 55, 89. I mean,
right. I think 13 is too close to 8. So I think they look too similar. Unless I'm wrong.
I disagree with that.
Oh, really? Okay.
For the short time frame that we're dealing with right here, for this little tiny crumbs that we're picking up from Warren Buffett, no, 13 is on a range chart. I think it's fine.
Okay.
Yeah,
So
you can try with a 13 range chart on ES, and you can try with YM. If you're dealing with ES, look at YM and start to build your consensus model. And you will realize very quickly that something is working or something is not working. Right? I trade NQ big time. I do, generally 8 to 9 to 10 trades every single day on NQ. And that's all I do, because I don't trade multiple instruments because it takes time and effort and I don't have the time. So I just do 9 to 10 trades on NQ, primarily triggered off of 21 range charts. And, that is it. And I just try to make about 50 points a day, and I call it a day. And that's pretty much it.
Yeah. So if I wanted to focus on ES and say I use the 8 and the 13, what would I use on the YM?
I would use something like a 13 or 21 on YM.
Okay.
Yeah.
Okay.
Just
Yeah.
give it a try. Observe, like, one day, you can even right now go market replay or even live markets. Just open up like, 3 different charts on 3 different time frames and see what works with your specific time frame, right? You can put up an 8 range ES and a 13 range ES and maybe a 21 range YM and see if the signals can be validated. And, you will start to notice correlations. And once you start to notice correlations, you're like, okay, well, yeah, this is going to work. And if you don't see a correlation, then you're like, oh no, this is too small of a time frame. You will figure it out. You'll figure it out yourself.
Thank you.
Yep.
Anybody else? Well, I hope that, kind of maybe give everybody a little orientation if they're using them. I know a lot of people have been using them. If you're not, then more than welcome to, but if you have any questions, then this will be the time.
Let me ask another question. I have the 4 bundle, okay, which does not include YM or our the Russell, whatever it is. I don't even trade it. Can I mix and match and get any 4 that I want?
Yeah.
Okay. Okay. All right.
Yeah,
sounds good.
usually, some people I've noticed that, they like crude and gold, or they like, ESYM, or sometimes, Russell, or NASDAQ is not, the faint of heart. It's usually the ES for some people. There's a lot of people who like ES, and I can't, I don't, that's just not me, but whatever. But yeah, it's usually the commodities or the equities. It's I mean, the gold, and I don't really follow gold that much. I mean, I have it up on the screen a little bit. Crude has been behaving really nicely lately. Yeah, so crude's a good one. Yeah, there was a couple years ago, crude was just dead. I mean, it just wasn't doing anything, and then it was just in a rut for like a good 6 months. It got to the point where we started switching off of it. I was in another room and we just stopped watching it after a while and started going to somewhere else, and then eventually we came back to it. Now it's back, but there was a while there. We were trading crude back when it went negative. And you'd always think that when something goes zero, that goes bust and bankrupt or whatever, but you would never know a future can go negative, but it did. Crude was negative.
Yeah.
Negative 0. I never knew it could do that, but it did. So very interesting.
Those were the good old days.
It was only like a year ago.
I know.
Maybe 2 years ago or something.
I know.
It wasn't that long ago, but it was definitely interesting. So
Yeah.
all right,
Anyways, I think that is it. And if you guys have questions, please reach out to us. We'll be more than happy to help you guys out and, give out more of our thoughts. I was posting quite a bit until like, I think about a month or 2 months back or so. But then I noticed that everybody was into this whole 100% automation kind of a thing. And then I was like, okay, maybe it doesn't make any sense to try and educate you because nobody is wanting to listen. So why unnecessarily waste my energy? So that's why I even stopped posting charts, to be honest, onto our Skype room, because I felt like it was useless. It was like, I was just posting to a brick wall, and there was nobody on the other side who was even remotely interested in knowing the charts. So everybody was just interested in making money, and everybody was interested in how do we make money with automation? That's the goal. And this does not belong to that. This is a totally different type of an instrument, a different type of an indicator. If
different
understood
tool.
well, yeah, I mean, if understood well, you can make thousands of dollars every single day consistently. But if you don't understand it well, and if you don't understand its capability, you will lose money with it. And I think that's what most people are doing right now, because of course, most of them are in simulation right now, and they're not seeing money come in. Of course not. It's not going to come in if you don't do the work. Consider this like one of those electric bikes, right? Which don't have a accelerator thing. You have to put in the effort first. Then the electric motor will assist you by giving you more power. Consider these indicators as that. These are not like you sit on the bike and simply press a button, or give it the acceleration and it'll just go zoom and start making you money. That is not what these were designed for. If you're using them that way, then you're doing it wrong. Might as well just stop doing it. So yeah.
All right. Well, appreciate your time. Anybody else have
Yep.
any questions on anything for that matter? Other than that, I think we're good.
Yeah, good information. Good information.
Thank you very much. Appreciate
Thank you, guys.